Hey guys, it's that Dividend guy coming at you with a Robinhood portfolio update. Happy Friday. Hopefully everybody's having a GGD, a great green day in the market. You know I always wish the best for my viewers and subscribers. So today we're going to go over the portfolio specs, how we've been doing for the day, the week, the month, the 3-month mark, the year, and of course all time since I started investing. As well as we're going to go over our individual stocks and how they're performing. And then to close out the video, we're going to be going over the stocks on my watch list, what price I want them to be at, and when I plan on adding them, and what my overall goal is for the rest of the year. So jumping right in, for today we are up about $21. For the week we are up $140. The 1 month mark we're down about $2,400, or right around 5%, which is not a huge deal. That just means that over the past month some stocks have gone down and there are some glaring deals in the portfolio. 3-month mark, same thing as the 1 month mark, down $7,000, down 13%. So we dropped about 3x more than we were at the 1 month mark. But again, that just means that market volatility, when there's blood in the streets, that means that there are buying opportunities. So not a huge deal there. 1 year mark, we are up $4,400, almost $4,500, up 10.5%. So we pretty much gained everything that we lost for the year that we had in the 3-month mark. So long-term mindset, we're still up. We're still in the green. And then all time, we are up $12,400, or 35%, 35.5%. So guys, long-term, we're up. The max our portfolio has been valued is about $54,000. So I'm not freaking out. I know that's a huge drop, like $10,000 in the past, like what would that be? Like 4 or 5 months. Not worried about it. Just going to keep on investing, letting those dividends compound. This overall price is not what I'm focused on. That fluctuates. That's not a huge issue for me. What I really care about is that monthly dividend income going up every single month. So let's jump into the portfolio now, starting off with Realty Income. So today we have 141 shares, $9,700 worth of market value. Average cost is $67.17. 20% of the portfolio is in Realty Income. Today we're up $50. Total we're up $280, up about 3%, with a dividend coming in on the 15th of around $35. Guys, I love Realty Income. One, because it's like being a property owner and you get that monthly income, that dividend income, like rent, like clockwork, every single month. And guys, they're a dividend aristocrat, which means that they've boosted their dividends for 25 consecutive years, and I think it's like 190 straight quarters as well. So they're very consistent, and that's why I love it. I would love to add more to this position, but currently I am up on it, so I will not be adding anything to Realty Income, but I do really love this position. Next, we've got Altria, which is the cash cow for my portfolio. 300 shares of this dividend king, about $12,500 of market value. Average cost is right around $47.50. About 27% of the portfolio is in Altria. Today we're down $78. Total, we're down almost $1,800, down about 12.5%, which that does not worry me. That just means that when I get paid the dividend, if it's still down, I will be putting money either into Altria or another position, whichever one is the best value according to that time. But right now I would have no issue adding to the Altria position at these current levels. But the most important thing, guys, is that our dividend income is still coming in. It's still stable even through these during high inflation, even through COVID. My dividend income was still going up. So MO dividends coming in on the 11th of July of $270, plus that O dividend is coming in on the 15th, so I will be able to reallocate back into Altria or add to Cracker Barrel, whichever one is a better overall investment at that point in time. Then we've got CocaCola sitting at $63. We've got 2.3 shares. I got a gift from Robinhood, and I'm super happy I got to pick CocaCola as an option. But $145.81 is the market value. Average cost is $62.73. 0.31% of the portfolio is in Coca-Cola. Then We're up 85 cents today. Total, we're up $1.26, up about 1%. I do want CocaCola to be a really big position in this portfolio to rival that of Altria, but at these current prices, I just can't pull the trigger. I don't want to add anymore because my average cost is a bit lower. Next, we've got the best performing stock in my entire portfolio being AbbVie. We have 85 shares, about $13K worth of market value. Average cost is right around $90 per share, right around $87 or right around $90. About 27.6% of the portfolio is in AbbVie. Today we're up $72. Total, we're up $5,500, up 75% on AbbVie. Then we've got Cracker Barrel. This is the one that I just switched out, and I want to keep it and keep adding to it as long as it stays below around $96 a share. So I've got 12 shares, currently right around $1,100 of market value. Average cost is around $86 a share. So I'd still add it here because of the potential upside. 2.25% of the portfolio is in Cracker Barrel. Today we're up $2.28. Total, we're up $30 already within like a week. So up about 3%. I plan on adding the Altria dividend to Cracker Barrel, and any extra cash that I get, I will be adding to that if it comes in before the X date. Then I've got Aflac. This stock was currently just covered on the Dividend Diplomats channel. Love Aflac, great insurer. 180 shares, dividend aristocrat, $10,000 of market value. Average cost is right around $61 per share. Around 22% of the portfolio is in Aflac. Down $18 today. Total down $817, down 7%. But a great buying opportunity on a phenomenal dividend aristocrat. They just boosted their dividend like 12% or something like that. It might have even been 20. It went from 36 cents to 40 cents, which added, I think, like $7 to my passive income, which is just insane. So I just plan on buying this at lower prices, lower than my average cost, and I'm just going to sit and let it accumulate me more passive income. Then we've got Walgreens. 15 shares of this almost dividend king. It's like a year away. $564 of market value. Average cost is right around $43 per share. 1.2% of the portfolio is in Walgreens. Today we're down $9. Total, we're down about 84, down about 13%. We'll add more to this position, especially at these low levels, but it's just not that month to buy. So I do want to explain something real quick, guys. So with my dividend strategy, what I plan on doing is this next month, Altria pays me. So I will be putting that money into either AbbVie, Cracker Barrel, or AT&T, or even Proctor & Gamble, just a stock that pays the next month, so my dividend income keeps getting bigger each and every month. Because if I reinvested those dividends back into Altria, there's nothing wrong with that. I still like the company. I like where it's going. I like that there's bad news, but it didn't necessarily affect the cash flow of the company. It's a great reinvestment for those dividends, right? But I wouldn't see that dividend payment until Altria pays me again in another 2 months, or sorry, like 3 months, right? So if it's 1, 4, so January, February, March, April. So I wouldn't see those dividends until October. So that's not going to help me when, August comes around, because I'll get a payment for July and then August. So it makes more sense to put the money into, say, AT&T or Cracker Barrel, because I switched them out, right? So if I put the money into Cracker Barrel, then that money is added to my dividend income and it grows faster. It's not a lot faster for the compounding, but it makes a little bit of a difference because it makes that money go to work for me 2 months earlier than it would have if I just reinvested it back into Altria. Plus the upside on Cracker Barrel is just so juicy right now. It's such a good opportunity that I don't want to pass it up. So then let's take a look at the watch list. So today, PepsiCo is sitting at 170. I want it at about 150, so I want a huge drop on the stock. But just like I said with Coca-Cola, a phenomenal, just a huge consumer staple here. They've, of course, got Pepsi. They've got Mountain Dew, which just came out with a new alcohol brand. They also have energy drinks. They've got Gatorade. Of course, they've got Frito-Lay with Doritos, Fritos, Cheetos, Tostitos, Funyuns. They just have a crap ton of brands on top of General Mills as well. So oatmeal and cereal as well. So they really encompass the entirety of American homes when it comes to products that they own. So I definitely want them. I just don't want them at this current price. Kind of the same story as AbbVie here, just too high for me to be putting cash into it. Next, we've got Procter & Gamble at 145. I would want to see it at around 140. about 135 to 140. So right now we've got about $20 of upside. I'd like to see about 30 before I jump in, 30 to 35. So I want to wait a little bit longer, but I still love the company. I use the brands every single day. They've got like soap, laundry detergent, dryer sheets, just so much stuff, like soap, paper towels, toilet paper. They're just an insanely huge consumer staple when it comes to household items outside of the food category. So I definitely want to be adding them eventually. I just don't want to add them at the current price. Then we've got T. Rowe Price, which I would love to add at this price, but again, not the month to be buying it. Next month, though, I will consider buying T. Rowe Price if it stays below, like, what, 150, I think? Yeah, anything below, like, $200 I would buy. So I definitely would be adding to T. Rowe Price at these levels, and happily adding. It's just not quite the month that it would be added to the portfolio quite yet. So with that being said, guys, last but not least is Berkshire Hathaway, which Berkshire I would buy at pretty much, honestly, I'm not supposed to say it, but pretty much any price and just cost down average. When I'm building a position out, or like starting a position, I really don't mind what the first purchase is. But if I'm going to buy a big block like I did with AbbVie, I definitely would want it to be low, like a Cracker Barrel or even like a Walgreens right now, below my average cost. But when I'm looking to start a position, the upside on this stock right now at 282, at 362 is about $60, $70 worth of upside, which is enough for me. I usually go for $30 to $40 like on my other positions. So I would happily buy Berkshire Hathaway, but I'm just wanting to wait until I get enough passive income to be buying a share of Berkshire every month or something and Berkshire. So like Altria is getting close with that $300, but I can't really buy anything currently in the portfolio for $20. So what I want to do is get that passive income up enough where I could say buy a share of Procter and Gamble and Berkshire, or CocaCola and Pepsi and Berkshire. So I want to buy multiple stocks and I want to have that type of dividend income. But we'll get there in time, guys. With that all being said, thank you so much for watching, and I will see you guys in the next Robinhood portfolio update. Take care, guys.